Good evening, folks. I'm Joe Dageston, and I'll be presenting the information about your 1040 tax return. Just want to thank the Darien Library for providing the space and this resource, which is excellent. This is not considered tax advice, so if you filed your return, you can't say Joe Dageston said that. This is just information. If you're going to make a tax decision, you should speak to your preparer or the CPA and consult with that person. So my background is I'm retired since 2008 from the IRS. Excuse me. I'm an adjunct at Fairfield and Manhattanville during the spring, one course each. One's in tax and one's in finance. And then since 2008, I've been preparing tax returns for the IRS as a volunteer. It's called the VITA program, and we do it 3 days a week at the Darien Library. And this year there's been about 5 or 7 of us doing tax returns. We did about 1,600, and it keeps growing each year. So what I want to appraise you of is what is your 2022 tax return about, and what's going to happen to your 2023. So you have to realize that probably everything that you're going to see here, I got on the IRS website, irs.gov. You can search and get anything you want about taxes there for 2022. And some of the changes that already been made for 2023. What has happened is what the IRS does is the IRS instructions for 1040 on their website is now 2022. They don't put the 2023 one up there until October or November. Congress makes all the changes to the tax law. The IRS just are the policemen, they command it, but the president and Congress can make changes, and they usually go all the way up to November to make changes. So the normal instructions for 1040 is about 100 pages. So it has a lot of information, and it even has the tax computations in there for you. So you can use the 2022 instructions to start planning your 2023 return. There's not that many differences as we'll see when I go through here. So what my objectives are is to explain to you the different pages and schedules of the 1040. Everyone's 1040 starts out with pages 1 and 2. That has everything there. In summary format. So the first page has income, deductions, then it comes to taxable income. Page 2 has the taxable income. It has any withholdings, and then the bottom line, it says you're going to get a refund, and then it may also give you some bad news that you owe money. Now you have to realize that the IRS is not making any decisions for you. You make all your decisions, so you're responsible, and your actions caused a refund or an amount owed. And hopefully when I go through these different schedules here, you'll see how you can change these areas and how to do it. So we'll spend some time on summary pages 1 and 2. Then we'll go over the supplemental schedules. So pages 1 and 2 have all the information. Then the detail, these are on the schedules, and not all of us have any or some of these schedules, but we'll go through each schedule and let you know. Then we'll go over what income documents you get. At the end of the year, you'll get income documents from the financial institutions, and this is how you prepare your return. Right here at the Darien Library, people come in with their documents, and we input it on the IRS tax software called TaxSlayer, and it produces the tax return. Then there's a lot of confusion about the difference between standard versus itemized deductions. We'll go over that. We'll show you the different tax brackets for some of the lower income people. We'll explain what earned income credit is, which will reduce your taxes. Then there are certain non-reportable transactions. And then the last item, any deposits to your account on a monthly, weekly, or whatever direct deposit, you should always review those, and we'll explain why. So the next slide, this is pages 1 and 2. And as you can see, pages 1 has 15 lines. And the top has your filing status, name, address, a social security number. What else? If there are any dependents, you list them. They need the social security number, relationship. And then in the system, they also have your date of births. Then what we're going to do is from lines 1 through 14, basically what we're going to do, we're going to summarize all your income. So you could see like 1A, that's W-2. So if you worked in several places and got 3 W-2s, the total would be there. And as we go down the line here, there's also interest, dividends. Let's see, where are they? There we go, line 2A. Then there's ordinary dividends, and then the older people may get IRA distributions, pensions and annuities, line 5B, social security benefits. And you could see there's like a 2A and a 2B, and because there are various rules that say this is what you got, but it may not all be taxable. So that's why lines like 2A, 3A, and 2B may not be the same. In some cases they are the same, in some cases they're not. So that takes care of income. But then the other types of income, if you have investments, look at line 7, and you sell securities, you have to report the gain or the loss. So that goes for all the securities, that goes on line 7. And you could see on these lines, and we're going to emphasize that down the road, it tells you, for example, capital gain or losses, attached Schedule D. So that's the detail schedule that has the detail, and the total goes to line 7. There is other income. There are adjustments to income. Some of the adjustments which reduce income. If people have college loans and they pay the loans plus interest, the interest is deductible. If you're a teacher, you're entitled to a certain amount of deduction for supplies that you provide for your class. Then you come down to line 11, which is adjusted gross income. So that figure is important, especially for those of us who are in Connecticut, because that figure goes right to the first line of the Connecticut return. That's where they start their tax computation. For us, that shows us all the adjusted gross income. Then we have to have a subtraction. The government will give you a standard deduction that will reduce your income, or if the itemized deductions exceed the standard, and we have a detailed schedule of that, and that'll be on Schedule A, then you are entitled to the itemized deductions. So that reduces adjusted gross income. Then if you're a Schedule C, a business, and you have a profit, they give you a deduction for your profit. So that's a subtraction. So then what happens is that we come down finally to line 15. So that's your taxable income. Then we're on page 2, where we get to the bottom line and the good news or the bad news. So you have your taxable income, and then they're going to compute the tax right away. Let's see, can I move you off just to see? Oh no, I have you don't need the linings. You have the descriptions there from line 16. So that's the tax. Then we start applying credits if they apply. There's a child tax credit. For example, my daughter has 2 children, and they're under 16. So she's entitled to a $2,000 credit for each of them. That's $4,000. It's very nice. However, when they turn 17, the credit drops down to $500. So she's gonna not be happy next year. Then there may be other taxes, like from Schedule C. If you have a profit, you have to pay what we call self-employment tax. That's 15%. So then when you add and subtract these items, that's your income tax at this point. Now we take in consideration what you had withheld and gave the government during the year. So there's withholding from W-2s for those of us who are retired and have Social Security and other items. There may be forms 1099, there's withholding from that. Then you also have the option, a lot of people are not aware of this, if you feel that you're going to have to pay more taxes and you don't want to bother the institutions because they may take a long time, you can always make payments to the government. It's called estimated tax payments. So you write the check, there's a form and 1040 EST, and you mail it in this area. I think you mail it to Hartford. I'm not sure. The address is on there, and that's, you are doing the withholding automatically yourself. I do that for because I have a system, and rather than bother all these people about withholding and changing it, I just do the estimated taxes. The earned income credit is for people with or without children, and their income is considered low or poverty. The most they could get is about $6,500 in 20, or $6,900 in 2022, and it may go up a couple of hundred in 2023. But it's based on income, and it's a roller coaster scale. So when your income is low, you start to get beef up and get close to 6,900. When you get to 6,900 and your income increases, then it goes down. And when you get to the top, like for some people, depending upon, let's say you're married filing joint and you have 2 children, the top may be 46,000. After that, you don't get any earned income credit. There's additional child credits. American Opportunity is for those parents who have children in the first 4 years of college. There's a computation there. And remember, the attached schedule do the computation. They have the forms and the schedules that'll be included. Then we finally get down to total payments. And then we're going to match the total payments to what the tax is. So 33 is matched to 24. And if you have good news where you made more payments than tax, you get a refund. You can do direct deposit. You put in the routing number and the account number. You should get it within 10 days of filing the return. If you owe, then the amount there is you have to pay. No matter when you file your return, you don't have to pay until April 15th. But you should be aware that, as I said, you control what happens. Your tax planning should be throughout the year. It shouldn't be a surprise when you do your taxes that you owe money or you're getting a refund. You should have an idea, not an exact number, but you should have an idea of what has happened. So we're 6 months into 2023. You should be looking at what your income is and your withholding. And if you multiply it by 2, if it comes out pretty close to what you filed in 2022, then you know you're okay. If it's higher, you may want to do some estimated taxes, or you may contact some people who can increase your withholding. If you sell securities, you have to tell your financial advisor, they will tell you as a profit, you can tell them to withhold, so that, let's say you sold securities for a profit of 50,000, so you're going to get taxed on 50, but they're going to take, let's say you want 10,000 taken out, they'll send it to the IRS, and that'll be on your form 1099 as withholding. If not, you could wait and you could do estimated taxes. So that's the big picture, that everything is summarized on pages 1 and 2. And your responsibility is during the year to keep track of, income generates everything. So keep track of your income and what's happening. And what I have done, I've talked through pages 1 and 2. Let's see. Oh, I went the wrong way. So the next few pages have exactly what I talked you through. So I'm just going to skip over those. That went through pages 1 and 2 of 1040, lines 1 through 37. Now, that's page 2. Okay, now here are the definition of the schedules. So schedule 1, 2, and 3, they have a lot of lines on them. For most people, there may be nothing on there or 1 or 2 lines. And what happens is there's a reference. Let's see if I can do this. If you go to the 1040 page 1 and 2, let's see if I can find, let's see. If you go to line 8, you'll see other income from schedule 1. So schedule 1's attached, and if there's a figure there, it'll show you where you got it. And there's other references to schedule 2 also. There's schedule 2, line 17. So they do cross-reference, and they don't leave you hanging, okay? Now, so that's schedule 1, 2, and 3. And the line number I have there is a reference to pages 1 and 2 of the 1040. Itemized deductions, that's schedule A, that's line 12, and we're going to define itemized deductions in a few minutes. So if it exceeds the standard deduction, you get that. The government gives everyone, depending upon their filing status, the standard deduction. Schedule B, that's the interest and dividends in detail. So it lists all the banks or brokers or mutual funds that you received interest and dividends, and then there's a total for interest and a total for dividends, and that's brought forward again to lines 2 and 3 on page 1 of the 1040. Schedule C is businesses. So the business has to list their sales and their expenses and arrive at a profit or a loss. Schedule D is capital gains. That means if you sold securities, they have to be reported. So this is the detail. And for each security, they're going to show the profit or the loss. And even if there's a loss, that goes there and that reduces other income. And Schedule E is for people who are landlords. They have a rental property. So the first page of Schedule E, they must show their rent and their expenses and whether they have a profit or loss on their rental property. And in the back of Schedule E, if you're a part of a partnership, you have to report what the partnership has on the form that they give you there. So that's what's happening. And then you can find instructions and whatnot on irs.gov for a Schedule A or B, how to fill it, and the definitions and whatnot. And they even have copies of the forms there. So you just go to irs.gov and do a search, and you can get anything and everything. You can just look at it. If you so desire, you could print it out. Now, here are the income documents from the different financial institutions. So during the year, you receive income in various ways: wages, monthly pensions, etc. Now, at the end of the year, in January or February, you're going to get documents, and this is what you have to put on your 1040. Now, all these documents, you get one. All of them also goes to the IRS, so they know what you're getting. So when you prepare your return, most of us now use computer software, and that computer software can be TurboTax, TaxCut, and the IRS uses TaxSlayer. If your income is low, I'm going to pick a number, say below 75,000. You could go on the internet and probably do your return for free using their software. You could also buy TurboTax and do it yourself on your own computer. And then some people go to H&R Block. If you use a CPA or preparer, they basically do not do the returns manually anymore. They all have software, and most of them pay, and they use the IRS software or TurboTax. So the very first form that most people get if they're working is a W-2. If they have dividends or interest, dividends would be on stocks or mutual funds. They get a 1099 for each company they have dividend, or each bank they have interest. The 1099-B, that's going to be associated with the brokerage firm. Now, the brokerage firm may also sell securities. So the brokerage firm does show interest and dividends, so you have to put them in that section. And then the sale of securities, that goes on to Schedule D. Now, the SSA 1099, that's for the old people who get Social Security. That goes on line 6A. Social Security, depending upon your other income, may not be taxable, and as your income goes up, some of the Social Security be taxed. The maximum amount of Social Security to be taxed is 85%. So even if you're over the limit, whatever Social Security you get, you don't get taxed on 15% of it. If there's mortgage interest, that's a 1098. And we'll discuss that a little later. That's going to go on Schedule A as an itemized deduction. If you have children in college, you're entitled to an education credit, but the college has to give you a 1098-T, which shows the tuition that you've paid and the scholarship. So the credit is only computed on the tuition you paid. So if there's a scholarship there, you subtract that from the tuition and you put that on your tax return and compute the credit. 1095-A is for health insurance if you received and paid by the marketplace. The marketplace is the government. They hook you up with based on income, they hook you up with an insurance company in your state, and they pay part of the premium each month, and you do. But this whole system is based on an estimate. What do I mean by that? To join the marketplace for 2023, you had to apply in October or November 2022, and you have to estimate your income for 2023. So based on that, you pay insurance monthly, the government. But now the government wants to reconcile, was the income you told us correct? All right, because if it isn't, then we have to make adjustments, and no one can project their exact income. So if the income you projected when you file your return, your actual income is higher, then you're going to owe the government money because they shouldn't have paid as much monthly health insurance. If it's lower, then you get a refund because you paid too much and the government should have paid more. 1099-Rs, that's pensions, annuities, and for us older people over 73, required minimum distributions. It's referred to as RMD. If you're in business and you do sales with certain people and it's over 600, they'll be sending you a 1099 NEC, and you have to report that on your Schedule C. And then if you're in a partnership, you'll get a K1 with the income or loss from the partnership, and that goes on Schedule E. So these are all the documents. Most of the people that we do tax returns for free here for the IRS, they have probably less than 6 documents. Especially we start doing tax returns in February. Those people, they want to get their refund quick. They have children, they're low income. They have one W-2 and that's it. The older people here, the senior citizens, yes, they have Social Security, pensions, and sales of securities, interest, and dividends. But I mean, they all have documents. We don't do any of the returns without a document. Now, standard versus itemized deductions. So you have to look at your filing status first, and the standard deduction is different for each filing status, and it changes each year based on inflation. Congress has already set that, and these figures are solidified for 2023. So as an example, the filing, the standard deduction for a single in 2022 was $12,950. In 2023, when it's going up to $13,850. And then you see married filing joint, head of household. For people over 65, they get an extra $1,750. Married filing joint, for each of them, you get an extra $1,400. And in 2023, married filing joint, over 65, $1,500 each. So the standard deduction for married filing joint is $27,700. For people like myself, and I'll get an extra $3,000, so my standard deduction will be $30,700. Now, Schedule A. Schedule A has to be higher than this. So what makes up Schedule A so that I can see if it's higher? Number one, medical expenses, but you only get to deduct the medical expenses that are 7.5% over AGI. So that AGI is multiplied by the 7.5%, and then any medical expenses over that, you get a deduction. State withholding and property taxes, unfortunately, Trump changed that. Everyone's disappointed, especially in Darien, if they own a house, not to exceed $10,000. Many people, even in Norwalk and Darien, they own a house. Their property taxes are $15,000 to $30,000. They can only deduct $10,000. And they used to be able to deduct all the state withholding. So now they can't deduct any of that. If you have a house, mortgage interest is deductible, and any contributions to charity are deductible. So those items have to exceed the standard deduction. And doing the returns that we do at the Darien Library, even people that I'll say own a house and make $150,000, because of the way the law is, they're all taking the standard deduction. They don't have enough itemized items to exceed the standard deduction. And the computer will take whichever is higher. So you can input Schedule A, and if it doesn't exceed the standard, the computer picks up the standard automatically. There are 7 brackets to the computer. So these are the brackets: 10, 12, 22, 24, 32, 35, 37. So often you hear computer and CPA specialists saying, you know, what bracket are you in? No one knows what bracket they're in. It's listed in the instructions. And here's an example. For example, single people pay the highest taxes. So the 10% bracket for single people is 0 to 10,000. That's taxed at 10%. Married filing joint, it's 0 to 20,000. And head of household, it's 0 to 14,650. So then if like if you were a single person, and let's say you earned 50,000. So the first 10,000 is at 10, the next group up to 41 is 12, and then from 41 to 50 is 22. So if you were to answer the question to a CPA, what bracket you in, you would say you're in the 22% bracket. But you know, the tax is computed in the sections, but that's the way it's referred to, the brackets. And you could see, you know, single, they get hit the hardest, and then head of household, they're in the middle. And these brackets, I think, were changed. There used to be a 39% bracket. Trump changed it. He lowered it a little. So the brackets usually remain the same. These ranges change each year, okay, due to inflation. So they change slightly. I think that this is the 2022 range. Earned income, that's refundable tax credit for, I'll say, medium and low income people, okay? And you have to have earned income. Earned income is wages or self-employed, the Schedule C. It's not alimony, interest, dividends, or workman's comp. That doesn't count. And here's an example of the credits for earned income credit. If you have 0 children, you could get up to the highest you can get is $560. If you have 1 child, $3,733. 2 children, $6,164. 3 or more, $69. But they all have income ranges. So the limits as a single head of household, 0. Once you're at 16,480, you get 0. Okay. For 1 child, over 43,000, you get 0, and you can see the others. I think I have an example here. Yeah, here's an example. Someone's marriage filing joint and has 3 children. Okay, so if their earned income was 12,600, they'd get 5,681. If it was 24,000, they'd get the top 6,935. And remember, I said it's a roller coaster. So what happens is now they're at 31, it goes down 4,006. 49,000, it goes to 2. And then as it goes up to maybe 50, 55, they get 0. Okay. Non-reportable transactions. If anyone has a Roth IRA, the interest, dividends, profit on securities is not taxable. And so you could take it out. There's rules to take it out. I think you have to be in it a certain amount of years. If you leave it to your beneficiaries, it's not taxable to them either. If you have the 401k or 403b accounts, while you're working, you invest it. The interest, dividends, and the profit on securities are not subject to tax. Now, when you get to be an old geezer like me, then there is an RMD. You're required to take it out. When you take it out, it's taxed as ordinary income. You don't have to take it out right now until you're 73. So you can leave all that in there. Congress is looking to even increase the age maybe to 75. Now that's your money. So you could take it out anytime you want and it's taxable. However, for the 401k and the 403b, if you take it out before 59, it's taxable, just as if you were 73, but there's a 10% penalty, all right? And the amount that you have to take out, there's a table, it's roughly only about 4% a year is the mandatory. And your financial institution computes that for you each year. Now, you should review every direct deposit. Why? Because sometimes these income items you have increase, and you may not be aware of it, but you're the one that decides how much is being withheld. So what I do for Social Security, pensions, what I do is I've told them always to deduct a certain percentage. So when my pension and Social Security goes up, the withholding goes up automatically. Now, when you're working in a W-2, payroll will ask you, are you married or single? And they have a table. But what happens is they don't know your other income. So if you have a lot of income and interest and dividends, you have not withheld enough. That's where the estimated tax comes in. And if you're selling securities into a profit, you have to tell your financial advisor to withhold money because they don't do that automatically. So you're the one that really, whether you know it or not, creates a refund or creates the fact that you owe money. And most people wait, until they do the tax return. But if you're planning and you're doing something quarterly and looking at your prior return and what your income is, there should be no surprise when you do your tax return, all right? Because you're up to date on it. And you should check your pay stubs. I've had some people that what happens is they come in with their W-2, and could you believe there's no federal withholding? And I said, how could they be? You made $50,000. They owe 6 or 7. They said that never happened. Well, what happened is their employer changed the payroll system, and they never checked their own profile. And I said, didn't you realize every 2 weeks you didn't get a raise? And I said, your amount was higher, so you have to look at your pay stubs and whatever information you have in your bank, just to make sure everything's going wide, because you're responsible for withholding and other items. All right, what do we have here? So if you have your 22 return, you could look at it. We're 6 months into 2023, see what your income is. You get all this information from banks and brokers and whatnot, and multiply everything by 2, see if it comes close to 2022. And if right, then whatever happened in 2022 is probably going to repeat in 2023. If not, you may have to take some action, increase withholding or do some estimated taxes. And what we're saying for federal, don't forget, you have an obligation to do the same thing for your Connecticut return also. Now, my email, in case you want to meet with me or talk to me about your situation, that's my email. I have a cell phone, so you could text me or call there. And, I do meet with people in person, usually at the Darien Library, and we got a conference room. And we get our laptops and tax returns and look things over, so I can give you direction. So that's it. So we have about 35 people here, and there may be some questions. So how am I doing here? Pretty good. I can't answer that question. All I can answer is in certain situations, if you're considered disabled and you get income from that institution, it may not be taxable. I had a relative who worked for the New York City Fire Department, and he was considered disabled. So when he got his pension for the rest of his life, none of his pension was taxable. So I'm not an expert in disability type situations. I'd have to research it, but I'm sure there's there could be some situations where income that you have is not taxable.
So just for everybody, that question was, are there any differences for 100% disabled veterans? The next question, Joe, is someone said age for RMD is already 73 years old.
Yes, it was just changed recently. It used to be 70 and a half. And then just recently, I think it's effective 2022. I know it's effective this year. So if you're turning 73 during 2023, then you'll be subject to an RMD. And your financial institution will do the computation for it. And then you have a whole 12 months to take that money out. You could take it out in a lump sum, you could take it out monthly, whatever you want to do. And then when you take it out, it's going to be taxable. So you could also have your financial institution do withholding for you. So, it's not difficult. It just comes as a surprise because it's extra income, but don't forget, when you worked, you never paid for this. It reduced your salary. So you just postponed the tax aspect.
All right. The next question is, when do you recommend a person ditch, for example, TurboTax and meet with a live professional? Well,
I'll answer that two ways. It depends on how good you think you are at numbers and at computers. I also volunteer for an organization called SCORE. We help small business people and get started and give them direction. So the first time you do something, it's always difficult. So you can buy TurboTax for less than $50. You can do 5 free federal returns on TurboTax. I use TurboTax for myself and for a couple of my kids who don't want to do taxes themselves. You could do TurboTax and then you could call someone like myself, okay? And before you file it, I could review it with you. All right. There's no problem with that. If you want, I mean, I do everything pro bono. if you're getting TurboTax and you're a little flustered, you come to the library with your documents and we'll do TurboTax together. I don't have a problem. Once you do it the first time, it's great because TurboTax saves everything. Let's say you did your 2020, and the same thing for TaxSlayer. Let's say you did your 2022 return. When it's time for 2023, it remembers what you did for 2022. So it tells you, where's your W-2 from this? Where's your interest from this? And you have to say either it's not applicable anymore or put in the amount, and it won't let you finish your return until you have all these documents. So I'd be glad to help anyone start with TurboTax. That's not a problem.
Great. We have 6 more questions so far. The next one is, I'm retired. How do I get taxes taken out of my monthly Social Security check?
Good question. You call Social Security, and not that they're the easiest to deal with. You call them and they'll give you an option. I think they give you an option of like 10%, 15%, or 20%. They'll withhold. I think they do it by percent. I do it by percent. I think I have either 15 or 20%. You could do that. The other way is if you have difficulty doing that. So say you just started in 2023, you could you know how much you're getting monthly from Social Security, so you could do an estimated tax until Social Security starts withholding, and then you don't have to do the estimated tax.
Do small businesses have to pay estimated taxes quarterly, or can they pay during tax time?
Well, that's a good question. Let's say here's the IRS site for estimated taxes. Estimated taxes, they say, can be paid April 15th, June 15th, September 15th, and January 15th. So they call it 4 quarters. You don't have to pay in the 4 quarters. Like I have a couple of people in business and they never start making money until August or September. So we do one estimated payment and we always do it in September. You could wait until January 15th also. So it all depends on when you're making money, because don't forget, nothing is withheld. So what the government does, they want to make sure they're getting the withholding regularly. So if you're making $100,000 in your Schedule C, they're going to say you made $25,000 a quarter, and if you didn't have any withholding in that quarter, then they're going to hit you with a small penalty. Okay, so you have to either prove to them that the $100,000 wasn't made until say September, October, November, all right, or make the estimated payments and not be subject to that little penalty. But you, through Excel or QuickBooks, you have to keep track of your income statement and keep records as to when you're making money. And don't forget, if you have a bad year, it's a loss. The loss reduces your other income, so that gets reported too. And then the profit, you have to pay the 15.3% SE tax on it also. So and that as you make estimated taxes, that could be part of the estimated taxes, the 15.3% on your profit. You put that in there. You don't have to indicate that as separate. It's just estimated taxes.
All right, I'm going to jump down briefly because I see a question that will be a nice, easy answer real quick. Someone wants to know, can they bring their taxes to the library to have them done?
Yes, I mean, that's what Viter is about. That's what we do for free. We do it on a Monday, Friday, Saturday. It's Monday, I think, is 12 to 8. Friday and Saturday is 9 to 4. And we only do it by appointment. So the Darien website will have an 800 number. You call that and they'll give you an appointment. And usually there's at least 5 of us doing returns at once. And you usually don't have to wait more than 15, 20 minutes. And there's no time limit. It takes as long as it takes to do your return. And you'll get a copy printout of your federal return and a printout of your state return right there at the same time.
And can you specify that that's between January and?
Oh, yeah, you usually starts around February 1st, and of course it ends April 15th. And this year, because of the holiday or something, it ended April 18th. So that's when we do it. And people start making reservations. Usually they make them starting in January. And then some people don't get all their documents till the end of February, so you can't make a reservation till March.
All right, the next question is a two-part question. Is Schedule A the only place my preparer may have put my mortgage interest deduction? And also, what if I did file Schedule A and have mortgage and real estate tax payments?
Well, for a deduction, the mortgage interest and the property taxes only go on Schedule A. Right, but don't forget, if Schedule A doesn't exceed the standard deduction, you don't get them. Okay, you don't need them because the standard deduction is higher. So another side to that is when Trump increased the standard deductions, a lot of people were itemized, including myself. So one of the items on there was charity. So now when my standard deduction went up, I didn't get any credit for charity. So a lot of charities saw that their contributions were dropping, because if I got the standard deduction and also contribute to charity, I don't get both. I just got the standard deduction. So the same thing. Your accountant could have put the mortgage interest and property taxes on the Schedule A. But if Schedule A doesn't exceed the standard deduction that you're entitled to, then you only get the standard deduction, and Schedule A will print out, but it'll show that you're getting the standard deduction, which is higher than that. I have a lot of people that come and they don't believe me. They say, I think I can itemize. So just give me everything. I put it in the Schedule A, and then the computer shows them that, hey, you're entitled to the standard deduction. It's higher. And then they believe me. And then they have it in black and white. They have a printout.
Do you have to pay taxes on capital gains distributions for mutual funds that you did not sell?
No. Yes, you'll get a 1099 for that. Capital gain distributions is like a dividend, and you'll get a 1099, and that'll be income. In fact, my broker always reminds, because I have a couple of mutual funds, and they don't decide on capital gains until October, November. So she always calls me. She says, Joe, I just want you to know you got a capital gain of 8,000. Did you do enough estimated tax to cover this? So and a lot of the mutual funds make the distribution in November and December. So you don't know what it's going to be. It's going to be different each year. And yes, it is taxable. And you could make an estimated tax January 15th once you know the figure. Like I can get to my brokerage account 24 hours. I'm online, so I can see any activity anytime I want. And plus my broker reminds me, especially of things like that. Good question.
We still have a few more questions. How does a mortgage grant through Connecticut impact taxes? They are covering tax, mortgage principal, and interest.
I don't know, to tell you the truth. I don't want to guess or answer if I don't know. You're getting a mortgage grant. I guess I don't know if you have to pay them back. If it's free, maybe you can text me or put it on the cell phone, exact details, and I'll talk to you on the phone, and I'll be glad to research it for you.
Are self-employed people audited more frequently, and what triggers an audit?
Good question. All right. Number one, remember in the beginning, I listed all those documents, and the IRS gets a copy of all those documents. So the reason the IRS has all those documents, they put them into their database. So everyone is getting audited, and you don't even know it. The reason is they're looking at those documents. It has your Social Security, and they're all income documents. And they make sure that you filed the tax return and that income document was on your tax return. If not, you get a Dear John letter from the IRS saying, we've looked at your tax return, your 1040, and this income document was not on there. Please pay the tax because you forgot to put this on the return. So that they call that a computer audit. Now, why, I worked for the IRS for 20 years. Who gets audited? Okay. I will say that if you're a cash business, and I'm not talking a small business like under 100,000 or something like that. I'm talking about a restaurant or even doctors, and they have maybe a couple of $1 million of income. If there's a lot of cash or insurance payments, they may be a candidate to audit. The other people that are audited, if you're deducting a lot of losses, okay, business or partnership, you may be looked at. But the fact of the matter is, the IRS audit personnel is down almost 50%. Your chances of getting audited have decreased substantially each year, such that people in the IRS are retiring. The IRS can't hire enough people to replace them. And you file a tax return and you don't try to guess you're going to be audited or not. If you think that it's a deduction, you take it. If you think that it's a loss, you take it. You don't do something or not something because you think you're going to be audited. All right, that's the worst thing you can do.
All right. Someone says, I'm retired and Social Security took money back from my check, about $1,000. I don't really know why that happened, and it was in 2021.
Two things. You have to call Social Security, but let's if you start taking Social Security while you're still working, I think if you haven't reached 65, you're only allowed to earn a certain amount, maybe 15,000. If you earn more than that, they take Social Security back from you. Right, that's the only reason I could think of, but it could be another reason. I mean, taxes and Social Security are very complicated. But if they did take something back, then you should call them and find out why. I mean, you deserve an explanation, that's for sure.
Really quick, jumping back to the audit question. Someone asks, how far back can you be audited?
Very good. The statute of limitation is 3 years. So right now, the last year, like 2019, had to be filed in 2020. So 2021, 2022, 2023. So 2019 has expired. They can't audit that. The only ones they can audit is 2020, 2021, 2022. Now, the statute of limitation is 3 years. Some people don't file for several years for honest reasons, okay? Now they file their return. They're due a refund. If they file their 2019 return now and they would do a refund, they don't get it because the statute of limitations expired in April 2023. If they file their 2019 return or their 2012 return and they owe money, you owe money for your life with interest. So, and as far as keeping documents, you only have to keep your documents for your tax returns for conservatively 5 years. That's it. But the statute of limitation is 3 years. So what happens is the 2022 returns were filed. So remember, I said the IRS audits everyone. So their computers are looking at the documents now, and they'll decide who's going to be audited for 2022 around October, November. So then they tell the field agents that I was, and then we have to contact you and start to audit you. And don't forget, the corporations get audited, business gets audited. So because staff is down, they're gonna go after, I'll say, the big fish. Like, I'd rather order a public company that has 20 million in sales, and maybe if I find something, I'm not saying I'm going to, there's a better return than ordering Joe Dageston, whose taxable income is 120,000. Okay, so they consider that, but also Congress says that they must audit a certain percentage of all types of people: single, married, filing joint, and business returns and individual returns. So it's a certain percentage, and it's a statistical sample. They don't pick names. Like I don't pick a return to audit. I get it, and once I get your return, I have the right to look at the prior year's return and the next year. So I could audit 3 years at once if I choose, and the same thing for a business, and the same thing for people like Apple, the public companies. They get audited every year. The staff is permanent. We're there, and then after a couple of years, we're replaced by another staff. But they're audited every year.
And how long can an audit last?
No timetable. It depends on are you prepared and have the information. I will say that the IRS does not want a audit to go on a long time. So I could be stalling. Let's say I contacted you and you have the information, and I have 20 returns and I didn't get to you. My supervisor looks and says, Joe, you contacted this person in February 2023. It's now June and you haven't finished it yet. Get there, or close it and say there's no change. So there's no strict timetable, but they don't like returns to be lingering on, certainly more than 6 months. I'm just saying that off the top of my head. Once we contact the person, we want to schedule an appointment, tell you the documents you want, schedule another appointment, do that, and get done and decide whether you owe tax, there's a refund, or there's a no change. We didn't find anything. And we can't audit everything. All right. When we do your return, we have to pick the most 3 or 4 line items. That's it. And get in and out. That's the strategy of the same thing for a public company. Do the same thing. We can't linger. You may have a nice lounge and you have nice cappuccino. We can't hang out there because of that. Okay. We got to get in and out.
All right, moving away from the audit question, for rental home improvement or some small work over $600, how do you pay a handyman with a 1099? And what if they provide the wrong IEN number?
All right. So what happens is that the carpenter, electrician, or whatnot, they did work on your house. So let's say it's a residential house and they do work at my house. Most of the time they want cash or a check or something. In that situation, whatever it is, I'm not going to issue a 1099. Okay. I'm an individual. Maybe I should, but I'm not. Now, if I have rental property and it's part of the business, then I'm definitely going to issue him a 1099. Now, if he gives me the wrong EIN number, what happens is when I give the individual the 1099, I also send a copy to the IRS. And I just did something for a relative, and he had several people. And I got a letter from the IRS saying that the Social Security number we gave on the 1099 and Social Security name didn't match. So we contacted him. And can you believe I transposed the number? The individual gave us the right numbers. And when I filed it, instead of the last 2 digits would say 46, I put 64. So the IRS sent us a letter. They didn't penalize us or anything. They just let us know that there's a no match. All right. So the IRS communicates that way. It is if they, you're not guilty of any. You're guilty if basically you get audited and you're taking a deduction and you list a person, you never issue them in 1099, you'll lose the deduction. Okay, but if they gave you the EIN number and you saw a copy of a letter or something like that, and that's what you used, you're off the hook. Okay, as in my case, you know, we weren't penalized, and he gave me a copy of the letter, and then I sent information to the IRS saying this is the number. It was my mistake. Another good question. You people are pretty good.
The last thing we have here is not a question, it's a comment. Someone heard they were gonna hire 4,000 auditors.
Well, there's been various rumors. The first one started out as the IRS going to get $80 billion, okay, over, I don't know, 4 or 10 years or whatever. And I think Biden and Congress put a cap on it or whatnot. The first order of business was number one, their computer technology is in the 70s. So they need several $1 million to upgrade their computer systems. Then something that got out in the media that was incorrect is they were going to hire, say, what you said, 4,000 people, all with guns to audit people. Well, that was corrected because the only people in the IRS that have guns are a certain division, and they do stakeouts for drugs, prostitution, and they also, if I'm an auditor and I have a fraud case, then I hand it over to them and they handle the fraud case. So they have a gun. I've met people that have been in this division for 20 years and never fired it. The only time they fired is they have to go every 2 weeks to the firing range for practice. But on the job, they never had to fire it. And there's been other instances where it's the other way around. So none of the people who handle audits, okay, have guns or weapons. And yes, the IRS wants to hire people. As I said, they in their budget they have money to hire people, but they can't hire enough to replace the people that have retired. So the compliance division, the division that does audits, when I was there, I think there were between 25 and 30,000 of us nationwide. I think they're down to about 18,000 now. So you can see the big difference. So one of the complaints that we used to get, and I'm sure we're getting now, is, you know, when you do audits in an area, you're doing it like in Fairfield County. So I get to know some of the CPAs. So one of the complaints I get from the CPAs is audits are down, you're taking money out of my pocket. If there's an audit, it probably means more business for the CPA. So if our audits are down, their income is down. So it's amazing how many people you affect. So CPAs love audits, okay, and individuals don't.
We had a clarification to that last question I asked. The person says that they meant they intentionally provide the incorrect IEN number so that the contractor intentionally wants to avoid the tax, or they provide the wrong address, incorrect name, etc., so they can't be traced back for the income.
Well, that's okay. So they give the wrong. So now I'm the contractor. I'm taking it as a deduction, and I paid this guy. So this guy is probably not filing a tax return and not reporting the income. So if I have the information, then you know, a name and address, then I'm off the hook, the contractor, and the IRS may try to find this guy, or maybe you heard the term underground economy. So many people don't report income, like sole proprietors. They get cash and checks. It's up to them to report. They don't get 1099s for everything. So there's always people trying to you know, escape the system. So that's part of the underground economy, which is in the billions. You know, it's tips, prostitution, drugs, all that is never reported. It's the underground economy. So the IRS is constantly working on that. an aside, one of the other big departments of the IRS now is identity theft. The Social Security number is stolen, and someone files a tax return with a big refund, and it's not their Social Security number, but they get the refund somehow. Okay, I have often during my session of doing tax returns each season, I get 2 or 3 people. I'm doing their return. We email it, e-file it to the IRS. The IRS says this tax return with this Social Security number has already been filed. So I have to help these innocent people. They have to fill out forms to get their refund, and the IRS tries to find the guilty people who file the return. One of the things the IRS has done is these guys who stole Social Security numbers, you know, they don't do one, they do probably 50 or hundreds, and the direct deposit always went into their account. Okay, so the IRS found out about this. So now if you want a direct deposit, you can only do 2 direct deposits in one account each year. So these thieves that are doing, you know, they have 50 or 60, they have to open up, you know, 20 or 30 different bank accounts if they're going to get the refund. So again, the IRS has a big site on irs.gov for identity theft in case if you get prank calls and you can see the phone number, the IRS will take the phone number and they try to track it down. And then if you're guilty of identity theft, the preparer will get some forms for the federal and the state, and you'll get your refund, and then the IRS will go after the crooks.
We had one more question. If you hire a company to work on a rental project, there's no 1099, is that correct?
You hire a company to say that again?
It says to hire a company to work on a rental project, there will be no 1099.
Well,
right?
if you're a business, and you're paying people, and in general it's over 600, they should get a 1099, right? If it's you know, as I said, if it's a residence or something, normally you don't give the electrician, the carpenter, the plumber, you don't give them a 1099 for the work, right? You know, it doesn't mean that you shouldn't give them a 1099 or can't. I mean, you're not violating anything. But to give them a 1099, you need their EIN or their Social Security number and address. You need that information. But more important for the individuals, when someone's doing work for your business or whatnot, you want to make sure they're licensed and have insurance. That's more important than anything else to begin with. In case something goes wrong, then you know, you want to make sure that you can get your money back, or they have insurance to cover it.
All right, so whoever wrote in that question, hopefully that answers it. If you have any more clarification that you need, I'll give you some time to get that typed in. That was the last question that is showing up in the Q&A box.
All right, so anyone else, remember, you could still email me or text. The cell phone's there, and you know, whether it's now or 6 months from now, it doesn't matter. I'm retired, so as long as I'm breathing, I do this work and try to help people. And thank everyone for attending.
Yes, thank all of you for attending. Just so you know, this was recorded. And so as long as the recording went through well, we will have it up on YouTube so that you can share it, you can revisit it if you need. We appreciate all of you joining us. We appreciate Joseph for sharing his expertise with us tonight, and hope that everyone has an excellent evening.
All right, yes. Thank you very much. Remember, Darien is a nonprofit, so if you want to make a donation anytime during the year, they would certainly welcome that.
Thank you so much, Joseph. Everyone have a good night.